Well, the hard part for them is that without the 193 immersion tools, with high overlay accuracy, it's going to limit them in terms of the yields and the cost of manufacturing, both 7 nanometer, and we expect within by next year they will be to 5 nanometer. But by the time they get to 5 nanometer, the West is going to be to 2, and that's a big restriction for them. I think the other interesting thing about what happened with ASML and how much of the last part was China is it also indicates that the Chinese lithography equipment manufacturers are not seeing that attractive to be that attractive at this point. And a lot of our indication about the capability of their 193 immersion tool, which was supposed to be introduced a year ago in December, it came on the internet just briefly and disappeared. Looks like that's a big weak point for them. But there's really nothing stopping China from being really well. It's the geopolitical, it's the combination of the technology and the geopolitical issues that are really the threat. If they were still part of the world order and had access to those tools, that would be a big issue for them. And then looming in the threat is India.
Indeed. Dan Martin here, good to see you. So, when I think about the supply chain for chips, right up top for the chips themselves, there's silicon, and as far as the manufacturing process goes, it's these chip equipment makers like ASML, Tokyo Micron, etc. Right? The chip makers themselves, there's only a handful. Chip equipment makers, it's an even smaller handful. China obviously doesn't want to be too dependent on these names, but right now it really has no choice. What really are their alternatives, though? Where else could they source this chip equipment gear from, or are they developing that capacity themselves? And how long is it going to take them to potentially catch up?
They're trying to develop the capability themselves. Personally, my forecasts are that it's going to be not in the foreseeable future that they will have equal capability. I mean, realize that China has been in the semiconductor industry since the 1970s, and they've been trying to be a global competitor since the 1970s. And so it's not like this is something new where they're coming into the market and really turning things around. And even in the West, there's no country in the world that has a completely vertical supply chain. Even ASML can't make their tools without having a distributed supply chain where the parts come to the tools from all over the world.
China is currently doing everything in its power to not be dependent on foreign chip manufacturers or even chip equipment manufacturers. The country is trying to create the technology itself, especially after the sanctions the US put on China last October, as well as the new regulations that forbid American chip companies from selling to China. So, on April 12th, Chinese officials told the tech giants in the country to phase out foreign chips that are critical to their networks, leading American computing and software companies to shift their focus to Japan, reinforcing a long-standing partnership that is accelerating the recovery of Japan's technological competitiveness. One of these companies is Nvidia, which has recently announced new projects and partnerships in Japan, and said that it welcomed Japan's participation in AI and quantum computing development projects, which in return unlocks new endeavors for Nvidia's business and stock performance after it suffered a drawback recently thanks to multiple reasons, and one of them is China pulling out from the game. In today's video, we're going to walk you through each of Nvidia's recent partnerships and projects in Japan and how this plays a crucial role for both parties. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
It's great to have you here. So talk to us just about the selling that we have seen in the Mag 7. Is there still reason, do you think, to own or buy into some of these larger cap tech names?
Yeah, I think, first of all, it's great to be with you. And look, these have been momentum stocks, right? It's been a momentum-driven market, and people were behind the curve. And so they had to race to catch up, which means they go into the momentum names. And they did a typical, market did a typical Wile E. Coyote move and ran right over the cliff. and right off the cliff. And so we had, I believe, 20 billion or so in CTA selling last week, just last week alone. And so we've gone from 3 weeks ago, we were talking about a bubble, right? And overbought and extended markets, particularly tech. And now all that's been washed out. So things move very fast. I think it's healthy. It's a feature of markets, not a bug, to have a pullback after a 27% move from October to March. So I actually think, I looked this morning, Nvidia, and I know that's not one of the ones you talked about earlier there, but Nvidia is off 20% in the last month. And this is the poster child for AI. And to me, that's an opportunity, because we're believers that we are in the early innings of the AI age, and semiconductors are the pick and shovel of the AI age. And so we have been exposed, we are exposed, and we continue to be exposed to the semi stocks in particular.
First of all, it was recently announced that NVIDIA will help Japan build a hybrid supercomputer that offers quantum computing capability for use by researchers and companies. This new supercomputer will be called ABCIQ, and it will be built by Japan's National Institute of Advanced Industrial Science and Technology. NVIDIA is already supplying GPUs to the ABCIQ, but the most recent reports say that it'll also start supplying quantum computing software via cloud service. Also, the ABCIQ is expected to be integrated with quantum hardware in the future. On top of that, it will feature more than 2,000 H100 GPUs on more than 500 nodes interconnected with the Quantum 2 InfiniBand architecture. But NVIDIA's role won't end there, as the supercomputer will also integrate CUDA-Q, the company's impressive hybrid quantum computing platform, to enable hybrid programming using two systems, quantum and classical computing. This quantum computer will be very useful because it can solve calculations that are too complicated for conventional computers. Basically, it will enable researchers to input a problem and get a computer-generated answer through the cloud system. But this won't just benefit the Japanese government, but the country's whole quantum computing sector, as the system will be available to the private sector to rent as early as fiscal 2025. Moreover, the ABCIQ envisions numerous applications like pharmaceutical research and logistics optimization, and as an example of the logistics optimization, Nikkei Asia reported that the new supercomputer will make it possible for logistics companies to determine the shortest route with the lowest CO2 emissions for trucks with maximum loads that make multiple stops. Following this supercomputer announcement, it was announced that NVIDIA is getting another major investment from Japan, but this one came from telecom giant SoftBank. SoftBank is investing 150 billion yen, which amounts to $960 million, in NVIDIA chips by 2025 to give its computing facilities the crunching power needed to develop world-class generative AI. And the breaking news is that when the investment is completed, SoftBank's computing power is likely to be among the highest in Japan, as the company tries to develop a Japanese language-specific generative AI. The GPU SoftBank will buy from NVIDIA will not only be used for the SoftBank's own development of generative AI, but will also be loaned to other companies, which opens up more opportunities for NVIDIA's expansion in Japan. But wait, there's still more for NVIDIA in Japan, and we're going to dive right into it right now. Hello everyone, and welcome back to Investocracy.
6, Nvidia, the stock bounced. Now listen to this. Don't laugh. This company has lost more than $300 billion in market capitalization from the top, almost a straight line. It's been a hideous stock, as any decline I can recall, frankly, down 10% alone on Friday. Now, the stock mounted in advance today, but not enough to erase Friday's gains. NVIDIA's gone from being the star of the show to being the goat of the game, and I'm not talking about the greatest of all time. Of course, we've learned from multiple pieces of research today that NVIDIA, the business, is doing quite well. Now, I think the stock finally got cheap enough to start tempting people. I don't want to make too much of NVIDIA because all high multiple stocks came roaring back today. But if NVIDIA couldn't rally today, it would have been a horrible sign. Luckily, it didn't happen. I don't know how much staying power NVIDIA stock is going to have, though, tomorrow. Because after the close tonight, Cadence, a very close partner of NVIDIA, guided down for both sales and earnings. And that is surprisingly bad.
Now, these deals weren't Nvidia's only deals in Japan. Back on April 19th, the Japanese digital infrastructure service provider, Sakura Internet, which is backed by government subsidies, announced that it's aiming to enhance its cloud services for generative AI. To do this, Japan's Sakura Internet has secured around 20 billion yen, which is roughly $130 million, worth of Nvidia's next-generation B200 chips as part of its investment to strengthen domestic AI computing power. A Sakura executive told Nikkei Asia in a previous interview that it was not easy to secure that much volume of the popular semiconductor chips, but the negotiations were able to proceed with the backing of the Japanese government. The announcement came a month after Nvidia said it will ship P200 chips by the end of the year and amid a push by Tokyo to boost development of Japan-made AI. Moreover, the company said it will make additional investments, both in AI computing power and data centers, totaling $646 million by March 2031, which means we could see more and more investments in Nvidia. The Japanese government is very keen on developing Japan-made AI, which is why the Japanese Ministry of Economy, Trade and Industry announced that, in order to establish the necessary supercomputers for developing generative AI domestically, they will provide a maximum subsidy of 72.5 billion yen to 5 Japanese companies, with Sakura receiving a maximum subsidy of 50.1 billion yen. This government support unlocks new means for the Japanese companies, including Sakura, to enhance their domestically generative AI developments. In addition, it could also mean that Nvidia will benefit as well from the other 4 Japanese companies if they see positive results from Nvidia's partnership with Sakura. It seems like Japan is replacing China and Asia with these major AI investments, and it is leveraging the fact that China is no longer in the game with the US tech giant Nvidia. That being said, we should expect more and more Japanese companies, along with the government's support, to discuss new deals with Nvidia, which will massively boost Nvidia's stock performance. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
It's time for FOMO. So joining us now to discuss more on Nvidia, arguably one of the most FOMO-esque type stocks in this market, is Caroline Wood, senior markets correspondent for the network. So Caroline, there's always news on Nvidia. It's like Nvidia and Tesla are the gifts that honestly continue to give. So walk us through all of the various headlines and analyst opinions on Nvidia today.
Well, Nvidia, unlike Tesla today, which is lower, not taking part in today's rally, Nvidia is back in favor today. Share is up almost 4% after a really rough go at it last week. Friday, shares dropped 10%. Lost something like $212 billion in market value in one day. It was the second worst daily loss of market cap for any U.S. company ever. Meta still takes first place there, but second place. So regaining some of that ground today, still down about 12% this month. It's not that the AI story has changed, Jenny, but higher rates, new aversion to risk have really made it vulnerable to some profit taking. And there's definitely profits to be had. Nvidia shares up 60% year to date, up 192% over the past year. Also, analysts say that geopolitical tensions could be weighing on shares as well. Now, those losses that we've seen more recently haven't rattled the bullishness of the analyst community. I saw Morgan Stanley came out this morning, reiterated its outperform rating and $1,000 price target on shares, saying we remain buyers of Nvidia post last week's sell-off. Doesn't report earnings until next month, but I did see that UBS actually downgraded the Big Six, so the Mag 7 minus Tesla, calling it the Big Six, saying profit growth momentum could collapse over the next few quarters, saying profit growth momentum is projected to decline to 15.5% by the first quarter of 2025. That's from 42.2% estimated for the same period this year. So still growth, but expecting the growth to continue to decline, saying our downgrade of the Big Six from overweight to neutral is not predicated on extended valuations or doubts about AI. Rather, it's an acknowledgement of the difficult comps and cyclical forces weighing on these stocks. That being said, Nvidia is a top performer or top pick for Oppenheimer. with an outperform rating, an $1,100 price target. Doesn't report earnings until May 22nd, so we still have about a month, or a month actually exactly, but points to data center AI demand remaining, continuing to lead, modeling 3.2 million Nvidia flagship GPU units this year, but pointing to the possibility of 4 million as supply loosens. Noted that Nvidia dominates the accelerator market, so still a lot of bullish commentary around this. I do think that companies like Alphabet this week and Meta could potentially send Nvidia either higher or lower based on their discussions on continued investment in AI hardware, which we know would have a direct impact on Nvidia. So not reporting quite yet, but some of the other Mag 7 stocks could send, give it a clearer direction once they report.
Tech's been under quite a bit of pressure. It seems like it started when we saw a change in outlook when it came to the Fed rate cuts. But I know you're watching one stock in particular that you now say is probably the most important one in the market. It's Nvidia, technically in correction territory, still up about 70% year to date, but in correction territory and trading lower this morning. These moves in Nvidia, what does it say to you about the broader market?
Well, the market has been following Nvidia more or less. Remember, we were up 27% from late October until April 1st. Driven by the AI march, and Nvidia is the leader of that march. Now with Nvidia weakening, and it grew to the third largest market capitalization company in the world, up to over 5% market cap, that's a sign that we're calming down the euphoria. I know it's been phenomenal for Nvidia. It still doesn't trade at a very hefty multiple, but you can't have just forward march without recognizing that the rest of artificial intelligence has not been one of profit making as it is for Nvidia. Nvidia sells the chips. Everyone else buys the chips. And for slowing down here of this stock, it's just a sign that the rest of the market has to regroup.
As you saw in the videos, Nvidia is still the market leader in AI chips, which is why Wall Street analysts are still bullish on the company despite the recent drawback. As of the time of this video, we have 55 Wall Street analysts who shared their ratings for the stock in the past 90 days, with 40 analysts suggesting a strong buy rating and with only 10 analysts suggesting a buy rating. Meanwhile, only 5 analysts suggest holding the stock currently, and 0 analysts suggest selling the stock. I personally agree with these strong buy ratings, as Nvidia has always been a great company, and the recent downturn in its stock price didn't really have anything to do with the company itself, but with market events. Plus, we have seen the deals Nvidia has been doing with the Japanese government, which would definitely unlock more and more opportunities in the future. At the time of this video, Nvidia stock is at $795.18, which is a significant bump after the stock fell 10% last week to reach $762 on Friday, marking the company's large stock decline on record. With that being said, it's inevitable that Nvidia stock will rebound thanks to the new impressive deals it keeps winning and the expected release of the company's new Blackwell GPUs, which are already seeing massive demand. We've seen analysts saying that this is a stock that could go above $1,000, so investors should keep holding the stock and weather out the current market fluctuations if they want to win big with Nvidia stock. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen. See you there.